What's up everybody, Nate here, and there is a new threat in the real estate market that could end up bankrupting the entire United States economy. Now obviously the traditional housing market has gone through it over the last year or so in the United States, but now Wall Street is starting to panic over commercial real estate. Vacancy levels for office buildings and commercial real estate have reached an all-time high, and landlords are having a really difficult time finding new tenants to fill their buildings. Not only that, but $3.1 trillion of commercial real estate loans are outstanding all throughout the United States, meaning they need to be refinanced or paid back immediately. But in this economy, those factors are nearly impossible to do, which could end up leading to an outright real estate crash and more banks going under. So what exactly is going on here? Well, like most things, this goes back to the pandemic. So a lot of businesses and offices started to become vacant during the high points of the pandemic because a lot of these businesses realized that they didn't need a physical office building in order to function. A lot of their employees were sent home, and that is where this big work from home trend really started. A lot of businesses didn't know what was going to happen with the pandemic, and because we were in a recession and had huge unemployment, many businesses wanted to try to cut their costs and be very careful in order to not tank the rest of their business during the pandemic. So this led to corporations and businesses selling off their real estate, which meant vacancy levels were at an all-time high, and you have hundreds if not thousands of office buildings sitting empty all throughout the country. Now, when we had lots of money printing from the Federal Reserve and the Treasury Department in 2020 and in 2021, and also really low interest rates, this wasn't a huge problem for the entire United States economy and banking sector, but a lot of things have been changing over the last 6 months or so. And now rising interest rates have been causing problems for the entire banking and commercial real estate sector. The Federal Reserve has been trying to fight inflation and lower demand by raising its interest rates, and what that basically does is make it a whole lot harder for banking institutions and businesses and consumers to borrow money. Borrowing costs go up when interest rates are high, which means that people don't have as easy access to getting money. So in short, businesses don't go out and get as many loans, and consumers also don't get as many loans. So real estate goes down, and also auto loans go down, and same with credit card spending. So right off the bat, all of these real estate developers and banks don't have the big liquidity that they did before during the pandemic, or even just before the pandemic when all of these businesses were in their office buildings. Now everybody has switched to work from home, and nobody is looking to take on a new loan to buy or build a building. That creates a huge problem for banks, and we saw that firsthand with Silicon Valley Bank. Silicon Valley Bank went under because it had a liquidity crisis. So a lot of its depositors went to the bank to try to get their money out because Silicon Valley Bank was losing a lot of money on its assets, and it was selling off its assets at a loss because a lot of people were trying to get money out of the bank. But when everybody went to the bank to try to get their money, well, there just wasn't enough money sitting in the bank for Silicon Valley Bank to give its depositors all of their money back. That left hundreds of billions of dollars on the table, and it meant people were not going to have access to their banks, and that created a big run on banks all throughout the United States for some regional banks and major banks. But now this commercial real estate issue could lead into a big problem for a lot of other banks in the future, especially ones that have huge ties to the commercial real estate market. Banks are having a really hard time with liquidity right now because businesses are not pumping as much money into mortgages like they were before. So they are getting out of the commercial real estate market, and that means they're not paying a mortgage, which means a lot less money for the bank. Banks then don't have as much money to go out and invest, and they don't have as much money to give out to other people. The second problem is there is a ton of businesses that have decided to hold on to their offices and commercial real estate at this point, but because of rising interest rate, a lot of those loans are getting harder and harder to pay off. Now you have tens of thousands of businesses who have gotten mortgages from banks who are being threatened by economic conditions and are about to default on their loans. A lot of your remaining businesses that have held on to the office model, well, they are starting to get out, and they are now starting to sell off their commercial real estate too. That is creating an entire imbalance in the economy and in the market. So now you have way more sellers than there is demand, and that could create an entire crash. I know you're probably thinking, well, the bank's collapsing, collapsing and the real estate market collapsing, well, that doesn't really affect me, right? Well, with banks sort of having this liquidity problem because commercial real estate is pulling out and going down in value, that means that they're going to have a lot less money to give to Americans and other businesses to borrow. What this does is create something called a credit crunch, which makes it a lot harder for people to get access to money. When the banks have less money, then they have less money to give out, which means they have a lot tighter and more restrictive lending standards. So because we have interest rates going up, that means it's already hard for millions of Americans to get a house or to start a business or to do anything that has to do with credit. There's going to be a lot less spending. And that sort of is a rotating problem because it affects banks too. And now banks don't have any more money to give out to Americans. Meaning again, spending goes down pretty much across the board. And now you have Americans and businesses who are not pumping nearly as much money into the economy. And that affects job growth and it affects the stock market and every market throughout the entire United States. Normally in a situation like this, a business could simply look at its office loan and try to refinance. But in today's economy, that is pretty much impossible. And in 2023, you have around 25% of the market that is going to have to try to figure out something to do with their commercial real estate loan immediately. They either have to refinance their loan or they have to sell. And for your big corporations and major businesses, this might not be a huge problem, but a lot of your smaller businesses that only have one location, well, they may end up disappearing forever. Like I said, with rising interest rates, it is nearly impossible to refinance your mortgage right now. Now, commercial real estate going down is not sort of a secular issue that only affects banks and Wall Street. It could also affect other major businesses that are surrounding these real estate locations. Especially when we talk about big cities here, while these office buildings draw people into the city, then a lot of the workers tend to spend a lot of their money at surrounding businesses, which helps the entire local economy. But with these office buildings sort of disappearing and remaining vacant, that has created a lot of issues for surrounding businesses. They now also don't have the money that they need in order to pay their mortgage or their rent, which means they start falling behind too. And we're already starting to see this. Property values are starting to fall, which means you have a lot of current office owners who are quote unquote underwater on their mortgage payment. That means if they were to sell their building right now, well, they wouldn't have enough money to pay off their entire mortgage and they would still owe. That forces them to not sell, but they also don't have the money to refinance and they also don't have the money to pay their rent or their mortgage. So a lot of businesses are really stuck here. Some of them are already starting to fall behind. Many of them are looking for advances from the bank or other successful corporations in order to pay their bills right now. But this crash in the commercial real estate market has also created a lot of opportunity for some other types of businesses, particularly apartments and hotels. Now that the pandemic is pretty much in the rearview mirror for most Americans, well, a lot of people have gotten back to traveling, and that means that demand is really high, but there's only so many hotels and travel destinations throughout the United States. Many of your big hotel companies are starting to buy these vacant office buildings and transforming them into hotels. It can be a big gamble though, because these hotels and these apartment complexes that are popping up out of nowhere, well, they have a lot bigger bills than in 2020 and in 2021 because Federal Reserve interest rates are a whole lot higher and it's much harder to come across money in 2023. Most of them are passing those additional costs on to customers, and we don't really know yet if that's going to work out for them. It could end up just creating an even bigger problem where now you have brand new buildings that aren't able to afford their mortgage or their rent because people can't afford to stay there. But at the end of the day, what this entire issue sort of boils down to is exposure and how much exposure these big banks have to commercial real estate in the United States. If it is revealed that a lot of your major banks are heavily exposed to commercial real estate and these vacant office buildings, well, then that could cause consumers to essentially make another run on the bank and demand their deposits back because they're afraid that these commercial real estate buildings and these companies that can't pay their mortgages anymore, well, they are going to default, which is going to affect bank liquidity and it's going to affect consumers and their ability to get their money. If customers pull deposits in mass, well, that means that now your lenders, the banks, are going to demand repayment from all of their investments. That includes all of their borrowers, but the borrowers, again, are not going to have the money to give back to the bank. That triggers even more outflows and even less liquidity in the market, and now you have banks unwilling to give any money to any sort of business or consumer at all. It means investors on Wall Street are not going to have the same access to money either, and lending standards become stricter throughout the entire United States. So a lot of outflowing money, but not enough money going into our economic system. Now, when Silicon Valley Bank and Signature Bank and First Republic Bank were having a lot of their issues, well, you had big banks like Wells Fargo and JP Morgan Chase essentially front billions of dollars in order to save those banks. Except for this time, 55% of these commercial real estate loans sit on bank balance sheets. So there really isn't anybody to turn to except for the United States government to bail out the situation if we do see a crash. And the United States government will only have two options to get its money. It can print billions of dollars causing inflation, or it can tax the system, i.e. you, to try to get the money in order to save these banks. So even though this is mostly just an issue for businesses and banks, the trickle-down effect could end up affecting everybody in the United States, both consumers and investors equally. And this pressure isn't going away anytime soon for the commercial real estate market and banks, as the Federal Reserve has pretty much promised to keep its interest rates high for an extended period of time, and consumers continue to spend way less money and will probably continue to do so for the foreseeable future. But that is it for today's business and financial news breakdown. Thank you so much for watching. If you want to stay up to date with all the top business and financial news from around the country, our team puts together a free daily newsletter, and you can subscribe to it by clicking the link in this corner right here. And if you want to stay up to date with me and everything else happening in the business and financial world, I'm putting out updates 7 days a week over here on this channel, and I've actually got another one ready for you right here, so be sure to check that out before you go. That is it for me, everybody. Be kind out there, and I'll see you all in the next one.